I've been watching the US dollar intently for many months now and urgently reporting on developments when and if they occur. And today sees one such dispatch. Over the past week or two, the US dollar has done one of its sudden about turns, and what had seemed like an upward thrust threatening to kill the likes of gold and silver stone dead has suddenly reversed, and that run that began in May now might be running out of steam. And in many ways, the US dollar is the single most important price in the world. The dollar is, of course, the global reserve currency. Vital commodities from oil to copper to wheat, energy, food and metal, in other words, are traded in dollars. It's a determinant of international capital flows. Is money flowing to or from the United States? And a strong dollar is in some ways good for international stability. It's good for America's reputation, but a weak dollar enables it to print and spend, and boy does America like printing and spending. Now, when the dollar is weak, asset prices rise, and the world sure does love a bit of asset price inflation. Borrowing is cheap, house prices go up, stock prices go up, bond prices go up, energy and metal prices go up. The party keeps on rocking. When the dollar is strong, an international sense of the jitters ensues, and the world worries that the asset price inflation party that's been going on since the 15th of August 1971 might be coming to an end. And if you like a bit of asset price inflation, the year from April 2020 was one heck of a party, one that few of the revellers will ever forget, despite the amount of cheap money intoxicants that got consumed. Now, you might have thought that shutting down economies in a global pandemic might be bad for business, but the money printers gave us a year few of us will ever forget. Was there anything that didn't go up in price? Steel, stocks, crypto, precious metals, energy, heck, even the price of labour went up. Even the cost of houses in now deserted city centres. It was a bonanza time for all. The S&P 500 doubled. And I'm not even sure where the biggest party of the lot took place. It might have been lumber, it might have been some stupid cryptocurrency that nobody born before 1993 has ever heard of, I don't know. But then in May, the Feds, in the form of a rising dollar, came along and shut down the sound system. They said, and go home, and revellers staggered towards the night bus with their newfound riches. Did they really get rich, though, or did stuff just get more expensive? Now, we wizened observers think it was the latter. The value of money went down. There are some that got rich, the clever ones with access to lots of cheap capital. Most think they got rich because their house went up a bit, but they really just kept up. Those with no capital, they just fell further behind, and wealth inequality got that bit worse. And Oxfam will print some numbers about it in a year or two. Everyone will get outraged, especially the clever ones with access to cheap capital, and the printing presses will keep on whirring. But anyway, back to last May. All in all, over the course of the party, the US dollar index fell from 104 in March 2020 to 89 by the beginning of 2021. That's a decline of around 14%, which is a lot for a currency. And I'd say at a guess, financially speaking, the developed world got at least 14% less equal. Then the US dollar suddenly rallied. It got to 93, the party's over. No, it isn't. In April, it fell again, and the asset party, it's back on, and it slid all the way into May, and then we got another rally. And this time, the rally had a stronger footing. There's a double bottom, a really strong base there, and this rally could have legs, and it did, and we marched straight back to 93. Now, I thought it could go all the way to the mid to high 90s. The heat came off commodities, the heat came off crypto, the heat never comes off US stocks. But then this week, we got a wobble, and it looks like we're headed lower again. The selling pressure on precious metals and crypto in particular has abated. We're now at 92, 91, looks like it's a given. So do we go all the way back to 89? Do we go lower than 89? I'm not so sure. It looks like a period of range trading is coming to me. I want the dollar to go lower. I'm reveling in the asset price party just as much as the rest of you. but we'll see what happens. Thanks very much for watching. I'll be back with another video very soon, and in the meantime, please subscribe to my channel. Cheerio.